Hi there, everyone. Good afternoon. This is Dr. Gwen. We are on a pre-recorded broadcast by the time you hear this. And today I have with me Angela E. Matthews, founder of the Happy Investor Method. And Angela will be sharing with us some side income strategies that she herself has been quite successfully using to make money and teaching other people to do. So I invite you to get a pen and paper because I am certain you're going to need it as you listen to all of this fabulous information that can transform your income and your life, really. And so, Angela, welcome so much to our live broadcast.
Thank you so much. I'm so happy to be here and to be here with your tribe and to give any insight I can in the world of side hustling with investing.
Awesome. I love the way you stated that. So now let's get down to it. We've been talking about side income businesses for a few weeks now, and we've looked at quite a number of different approaches. We still have more to go. And today we're going to be talking about investing stocks. Am I correct?
Yes.
Right. So tell us, first of all, Angela, how did you get started doing that?
I actually started about 10 years ago, not too long after having my first job right after college. And it was like one of those jobs where you wake up and you think, this cannot be it for the rest of my life. This is just not it. And I thought to myself, well, yes, I can find another job. But the market at the time, it was in '07, and the market was just about to hit the recession. And so the job markets were starting to dry up. So I sat there and I thought, you know what, I'm going to invest because to me, that's the only way to make sure that I wouldn't be there for the rest of my life, right? That's one of the things that I learned the most, right? Every person that I knew out there who was successful, every millionaire, every billionaire, it's impossible to get there and stay there without investing. So I decided to start investing then. And what's really interesting is that shortly after starting, 6 months into it, and I'd invest every single paycheck a certain amount of money, the market started dropping and I started losing money if I were to cash out. So every day I'd log onto my account and it'd say minus this, minus this, minus this. And so I decided to not do what everybody else was doing around me, which was selling. I decided to actually hold on and to start buying more. And so I had a complete mental shift, instead of people saying, oh, the market's going down, we're hitting a recession, sell, sell, sell. In my mind, I thought, well, heck, this is kind of like a sale, like a one-day sale at Macy's. So, but for stocks. And so I'm going to buy Facebook at this really cheap price because I was looking at it before and it was way more expensive. So that's how I started. And it's been 10 years since. And after the market corrected itself and recovered, it's been a bull market. It's been rising ever since. And so it's just been a really great decision and investment for myself.
That is so completely amazing. And that mindset is not the average mindset because when people see their money dropping, the instinct is to jump out. But really, that's not what it is. I have done some investing myself. 4 years now, I have been doing investing in options. And I guess it's not so much investing because I'm trading options. And so with the options approach, you can ride the market whichever way. But this stock approach, I think, is a more long-term approach, right? Would you say that?
It is. It's long-term, and there are short-term benefits to it because you also get dividend payments. So the more investments you have in companies that offer dividends, like Bank of America or Ford Company, just to name a few, they give you a little kickback. And the kickback is way more than the interest in your bank account. So to me, as long as I'm making more money than the interest in my bank account, that's also a huge win.
Absolutely. Completely agree. So now, what does the whole process of investing stock looks like? For some people, they may never have heard about this because I know when I grew up, my parents certainly didn't invest in stocks. So I had to learn about it. And some people don't have that opportunity to learn. This may be their very first time hearing about this. So how would you explain this to someone who may be interested in considering?
Well, I always explain it in a way of investing just in its simplest form is that you're investing in things every single day. whether you realize it or not. And what you want to do is kind of shift your mindset from investing in things, say, versus consumer and consumption to ownership. And so to me, that's the first lesson, the first thing you have to understand. So instead of going out and buying your kids Nike shoes, thinking to yourself, I'm going to go out and buy Nike stock, right? And it's a difference, right? Because one is consumption and one is ownership. And then once you just get your mind around that you can actually own the things that you see around you every single day, what you need is a brokerage account. You don't have to overcomplicate it. It's pretty much a guy that goes to the market for you to buy goods, as if you'd have any guy going to get goods. And you place an order for, say, hey, I want to buy Nike, I want to buy Apple, and you pay them a little percentage or a fee. Sometimes it's a percentage if you've got a private guy. If you got an online guy, which I think the online guys are the easiest ways, you just pay a fixed fee. They go to the market, they pick up your stock for you, and you own it. It's literally that simple, and it probably takes about 30 minutes to understand the process in total, but it's not as overwhelming. And you probably do it if you had a 401k, you probably had investments already in funds. But I think it's cool when you can do it yourself and choose your own companies.
Yeah, and all this is happening online from your computer, right?
Exactly.
Not like you're going out. Right.
Exactly. No one's going out. It's not even that you're calling a guy. You know, so if it was 20 years ago or even 15 years ago, you'd have to have a huge minimum. You know, you'd have to have quite a few $1,000s in order to qualify to get said guy. But now with the way technology is going, it's all online, kind of like how we create businesses online. Same thing with investing.
Completely. You know, probably about maybe 15 years ago or something like that, I can't remember, there was a company that was actually offering, like you could start off with any amount of money that you had and you could buy a fraction of a stock until you gradually built your way up to whatever you needed to build it up to. Is that even something that's going on now? I mean, that's been quite a long time. My kids were really young back then.
I actually started on a program similar to that, and I did it with ShareBuilder. It was owned by ING.
That's it, ShareBuilder.
Now it's actually purchased by Capital One. It's Capital One ShareBuilder. And it's an automatic investing plan. And so every month or whatever the frequency is for you, every week, every month, you say, I want to buy $50 worth of Amazon. And it keep doing it until you got to one, or how many ever shares at Amazon. So that plan is still there for folks. But there's also an app called Stash. And with Stash, you can also, it's a trading app, but with Stash, you can also purchase a portion of a share. And so, maybe Amazon right now is worth over $1,000 to get your little piece of ownership, your piece of the pie. But you don't have to pay $1,000 and pay for one entire share. You can get half of a share or a quarter of a share. Heck, you can get 10% of a share with things like Stash or ShareBuilder.
So now I remembered when I was learning this whole lingua, and it was like a foreign language completely to me. And I'm sure there are some people who are probably watching us right now and wondering, share? What's that? How would you simplify that conversation for someone who may be lost now like I was back then?
Oh, absolutely. And we were all lost until we found something, like imagine something that you're doing now. You weren't always as proficient at it, which is comforting, right? So just as Dr. Gwen, we all had to start from zero. So just as you're starting from zero with investing, know that it gets easier and we're living proof of that, right? Because we all started from the same place. So the analogy that I love to use and I use it for my students, is a piece of cake. So I teach something called the 5-day investing boot camp. And in the boot camp, this is day one, but I'm going to give you like the 60-second version of it. But you have a cake, and my favorite cake is strawberry cake, right, with the strawberries on top. And so imagine if I had this cake and I decided to slice it into 10 different slices. And now you come to me and you say, Angela, I would love to own and to buy a piece of cake. And I think about it and I think, well, technically I probably spent about $10 on this cake entirely, like as a whole, between the flour and the strawberries. If it was a box, even cheaper. So the cost for me was $1 a slice because there's 10 slices. Now you're going to ask me, I want to buy a slice, and I'm going to say it's going to cost you $5. right? Because my effort, all that. And you're going to say, well, that's amazing. So you buy my cake for $5. So that's wonderful. Now let's say that later on, it comes out that this cake has healing properties. It cures cancer. It does all these wonderful things. And someone comes to you and they're like, oh my gosh, I heard you have Angela's cake and I heard it can cure cancer. Can I buy that cake off of you? And you're thinking, well, I did pay $5, but heck, it could do so much more. And you tell the person, I'm going to sell it to you for $10. So you just sold your piece of cake, right? You sold your share, and that's called a share. You sold your share of cake, and you made a $5 profit, right? Because you paid 5 and someone bought it for 10. Now, that means you had a gain, right? Now, let's say someone comes out with an expose that Angela's cake causes cancer or it does something horrible. Now you're like, oh man, I got to get this cake off my hands. And someone comes to you and they're like, can I buy your cake? And they say, I'll buy it for $3. And you say, fine, I'll take it because I don't know where this cake, like where the price is going to go. And then you sell it for $3 and then you lost $2. But that's really the stock market. It really, people are just buying shares of cake and selling shares of cake. It's based on how the cake industry is doing. It's based on how I'm doing as the owner. And that's pretty much the simplest way. When you purchase a share of a company, you're literally purchasing ownership and you're giving that company your money to invest it in ways that's going to make them more money, which is why you're a shareholder. And if you ever heard, in those funny stock market movies, they're like, oh no, we have to, keep in mind our shareholders. Because the second a shareholder isn't happy, what do? You sell it, and then the company's not making money. So they always want to keep you happy. They always want to make you money, and that's how you make money. You make money when you sell your share back for more money than what you paid for it.
Completely awesome. I love that analogy and very, very understandable, very clear so that people wouldn't be lost because everybody understands a slice of something or a share of something. Yeah. So that's good. The next question I have for you is, it seems like people have a mindset shift that they need to make when they invest. And I'm saying they do have to, most people, because they're used to buying stuff like the analogy you used earlier. They're used to buying stuff that depreciates, stuff that doesn't have any value the minute you buy it, right? Like those handbags and those shoes, or even a brand spanking new car that as you roll out of the parking lot, that thing depreciates. You cannot go back and sell the car for the same thing you just bought it for. Have you had that situation when you're working with your students in transforming the mindset, and what would you give as the advice, the counsel, the strategy, the biggest thing that would get people to get to the mindset where they can begin to invest?
For me, I think the biggest thing in terms of mindset is what I said before in terms of switching from consumer to ownership. Thinking, is this going to be around later, and is this going to come back with friends? So when I think about my money, I think it's okay. Like if I'm investing in a program or like an educational program or a business program, I fully expect that to come back to me with friends. Like not like, of course we're friends, but I mean money friends. Like
I got you.
Come back like tenfold, fivefold. And so when I make a decision, I think, is this going to realistically come back with friends, with monetary goods? So when I make an investment in, say, my education, the expectation is that I can get a better job, therefore my bank account will eventually have more money. When I invest in a company and I'm vetting a company, I'm thinking, I'm giving you my money, right? I own shares in Facebook, right? And so I'm going to purchase Facebook with the expectation that you are going to be around for 5-10 years. You're going to be able to go to work for me when I can't go to work myself or when I don't feel like going to work myself, right? I know that there are tons of people out there making it possible for me to earn money with this investment. So for me, that's how I really separate it. I get the car. Yes, I can go to work with the car, but did I need to get that specific car at that specific price to accomplish the same goal? Right? And so those are the things you want to start thinking about. Did I need that specific handbag that cost that much money? Or could I have looked cute with a lesser one and just invested it?
Yes. The questions you're asking are really important questions for us in this day and age. In our society where everything is so disposable and everything is the latest gadgets and everything. And I know I'll be mashing corns if I speak like that. But, sometimes we need to hear the truth. And, the intent is not to mash anybody's corns or to make anybody feel less than, but really realistically looking at the way we spend our money. Like, I have an S5 phone and there are S8s out there. Like, why would I want to go spend $800, $900, $1,000 for that phone when my S5 works perfectly? It's giving me everything I need. Why don't I take that difference and put it in a stock and invest it somewhere where it can grow and make me even more money? Then maybe I can just buy my S8s without even have to worry. The reality is that we're a spending society, and a lot of times we spend at the expense of our needs, don't we?
Absolutely. And we're trained to be a spending society. This is not by fault. I mean, the companies that we're investing in, they're out there marketing and advertising in such a way to make people think that they need it, It's just up to you to think about it. And so there's Warren Buffett. He's like the grandfather of modern day investing. And he has, when you look at Warren Buffett, he's one of the wealthiest men in the world, self-made billionaire. And it's really amazing because he still goes to Dairy Queen. Every morning, he just gets a cup of coffee from McDonald's.
He lives in the same house.
He lives in the same house. The man doesn't go shopping. And so it's really interesting because when you look at the habits, truly look at the habits of wealthy people versus the habits of people who want to appear wealthy, you'll actually see they're very different than what you and I are doing.
Yes. Yeah.
Right? And so I love what you said about the phone because, hey, you still get internet. You can still take a pretty decent picture.
Oh my!
You can pick it up when people call you, and you can still.
Goodness, yeah.
What more do you need from a phone?
I don't know, but anyway, guys, we still love you.
Still love you. Don't you
technology folks.
Exactly. All I'm saying is pick and choose for your lifestyle, right?
Yes.
You can't have it all. Just really be clear on what that all is for you. For me, I love to vacation. But you know what? When the market turns down, which for me equals a sale, I've been known to cancel vacations, like ski trips straight out. My friends will say like, hey, we're ready for the ski trip next week. And I'll say, you know what, guys? I'm going to have to catch you on the next one. And the reason why I did that was because I had to buy stock in, I think it was that time I bought Apple. Yeah, I had to buy stock in Apple because it's sunk in price. It's sunk in value. And I was like, do I spend $2,000 or $1,000 skiing and have these great memories, or do I just catch the girls later next week and soak for a week and actually own something that's going to help me pay for my own ski trip later? I'm not starving, I went to Europe like the month later. It wasn't crazy. So all this to say is that we're not poo-pooing on your lifestyle. We just want you to reallocate the money that you're spending with just things to make you artificially happy to things to guarantee your happiness later.
Okay, great conversation. Now, I'm sure there are some people who may be asking, Angela, how do you determine which stocks to pick? And I know that in itself is an entire lesson, but if we could do like the synopsis version of that, like how do people determine which stocks to pick?
So I like to think of it as a bullseye, right? And so you've got a bullseye, you've got the center circle, then the outer, and then the other outer, right? And so I tend to think of things that I know zero about. It's going to be the outer bullseye ring, right? So you're not going to catch me with a first choice stock being for me a biotech stock, right? In the medical sciences division, because I don't really know jack smack about that too much, right? And so I can't personally vet it with my own knowledge, right? And so what I want to do is I want to be able to be a triple threat if I can, right? Not too many companies you'll be a triple threat. And this is what I mean by that. So I use Facebook a lot because I'm an entrepreneur. And so I've invested in Facebook ads. I own Facebook stock, and I'm a user of Facebook. That is a triple threat, and that is dead in the eye of the bullseye, right? And so it's not just a company that I use it in every single way it's possible to use. So it's making me money, I'm making it money. I'm giving them my time, they're giving me their time. So when I notice that advertising costs are going up, I know that they're going to actually be making more money for the quarter. When I notice that I have colleagues and friends who are spending $15,000 a day on Facebook ads, I know the stock price is going to go up because they're posting earnings, right? And so that's an example of a triple threat. So when you're thinking about things to invest in, I'm not saying go for the obvious like Tide detergent, which is owned by another company in and of itself. But I'm thinking if you're working, if you're an accountant, or if you are a mom and you have a blog about baby products, what are some profitable companies around you that you're already bragging about that you might as well just buy, right? Because you're already making the money and maybe they're giving you an affiliate check or something like that. But how can you make that relationship even more impactful?
Okay, great. So I know that sometimes companies can appear to be profitable when they're maybe having struggles financially. So there are definitely reports and other data that people can review, right? That will give them a more realistic vision or view of how this company is actually operating, because they can blow some smoke up front.
Absolutely. So an example would be Snapchat, right? That's something that happened recently. If you remember when Snapchat went public, meaning that they were no longer private where only a circle of friends could own it or invest in it. Now anyone and their mama could invest in it. Everyone started hopping on Snapchat. They were like, wow, my kids use Snapchat. This person used Snapchat. I'm going to get Snapchat. And it was purely based on speculation that because so many people used it, the company's making money. But they never understood how does this company make money, right? So if you don't understand how a company makes money, I would highly suggest you do not invest in it, right? If you don't understand the business model, because it's the business, right? Would you invest in someone who just declared bankruptcy? Probably not. It's the same thing. So for Snapchat, we had actually a special training for it because everyone was emailing me, should I invest, should I invest, should I invest? And I'm like, I would not touch that company with a 10-foot pole. And the reason why I know is because you can go into their financial reports and they have so much debt. They've yet to actually make a profit, right? All they're doing is taking money, money, spending it. But the money they're taking, it's not making more money. It's not coming back with friends. It's just sucking it in. And so for me, when you do make an investment, you do have to vet it and do research, right? Understand how the company makes money. And once you understand how, are they actually making money? So for Snapchat, if you didn't know, it's through advertising. Are they successful at making money through advertising? At the moment, no. Neither is Twitter. The only social network that has been very successful at that to date has been Facebook. And when you look at their numbers, it's all green. So you can easily check that out at the SEC. A hack that I use is just Yahoo Finance, but it's open public information that you can just simply get. But you want to check that first.
Okay, awesome. Now, I know we did talk about minimums, and you did give us a few apps that people could use to invest in parts of shares, right? So they didn't need to buy the whole share. What are some things, what are some other things you feel that people need to know in advance before they start investing? You've talked about understanding the company and whether or not they themselves are using the products and services in the company. You've talked about the income earning opportunities or foundation for the company. Is there anything else that people need to think about as they consider an option for investing?
Well, we want to definitely think about the market as a whole. Is it going up or is it going down? If you're investing while the market's going down, there's a good chance that your investment could take a little dip before it increases in value, similar to how mine did when I first started, right? And if the market's getting higher, you may also want to consider that the time you take to vet what you're doing, the companies may be getting more and more expensive, right? And pushed out of your
price range.
How much you want to, your price range, thank you, for how much you want to spend. So I wouldn't take overly too long. You know, sometimes we have companies for 6 months that we're thinking, and the opportunity may actually just go away. And if that's the case, I want you to think of similar companies like that one company, because you may have opportunity there. So I wouldn't want someone to get too bogged down in research, because sometimes we do. And even when you're a business owner, like you can become a research addict and not actually have action. And
Mm-hmm.
so it's so common, and the same thing happens with investing. So I just want to make sure that you actually have something out of it. And if you're not taking, don't take your life savings. Don't take something that could have been for a higher yielding debt. Example, if you've got tons of credit cards out there and ridiculous interest rates, focus on that. But I do want you to try to set aside some cash every month or so to specifically dedicate it to investing, right?
Mm-hmm.
Even if you're not buying lunch every single day and you're making it, even if you're not going out to eat or foregoing a pair of shoes, right? So that money isn't hard-earned money. It's money that was going to be gone anyway, and it takes the attachment. And then you can start little by little, right? Bank of America, their stock right now is like $20. There are tons of companies where their stocks it's literally under $50. So you can still purchase and be okay.
That is great, great information. Now, I know you have your own training program, and you yourself, you are doing quite well with your investing. So, that's really something that people ought to know, that we're not just bringing anybody on this live cast here. Angela has been investing for 10 years, and she's doing very well, and she's training people to do this. So if people want to get a hold of you and the training programs that you have to offer, where would you send them?
Yeah, they can go to Angela, ANGELAE, which I was just telling Dr. Gwen, you have to use the E because there's literally over 300 Angela Matthews out there. And so, so Angela E, and then Matthews, MATTHEWS.com. And if you go in the courses tab, we've got free courses. You can opt into our list, which I give tons of goodies. An example would be, just this week, our last goodie was that companies would be going up in value. So if you wanted to purchase them, you should purchase them earlier than later, because once they reported their earnings saying that they were doing really good, the price is going to get up higher. So you might as well get it now, because you can make a decent profit in a short amount of time. And so that was really helpful. And it was only information given to our list, because it's still sensitive information, right? It's still investing information, and nothing that I offer is necessarily like specific financial advice. It's always under the vest of, I'm teaching you so that you can learn yourself. And I don't want you to make the same mistakes that many people do. And so that's why I do what I do, right? I don't want people to make the same mistakes that I have made, and that a lot of other investors make, that actually cause them to not be successful. Because it's not necessary if you get education.
And I am so happy that you made that, and I'll be sure that that is represented on our screen, that this information is for educational purposes. We are not giving you any kind of advice on where to buy stocks or how to buy stocks. This is educational. So people will need to be aware of that. Is there any last minute information that you would like to leave with people so that they can begin to consider seriously about getting started?
Absolutely. On our site, you'll see, just put in your information, you'll get a free course. But we also do a 5-day investing boot camp. So I know that our conversation together, this was like 20, 25 minutes. It went by so fast. But over the 5-day investing boot camp, you actually get to learn how to invest, and you understand the mechanism behind it in 5 quick days. And instead of taking a 90-day course or a 24-hour one, I think it really is sufficient to get people on their toes and release the fear and the anxiety that it comes with, and the pressure of feeling that you're alone. Because there's literally a group of quite a few dozen people at it with you. So it's a really nice experience.
Completely awesome. Angela E. Matthews, thank you so very much for joining me today. And for all the listeners that tuned in and everybody who's watching this cast, when you see this, as we said, it will be pre-recorded. And I have to say that because Facebook wants me to say that when I post a pre-recorded live cast. So it's pre-recorded, and I'm thanking you so much for joining me. Angela, thank you so much for the information that you've shared. And to our listeners, thank you very much. This is Dr. Gwen and Angela. Thank you.
You're welcome. Thank you.